Good morning, everyone. Hope you're having a good start to your day, Tuesday, July 30th, Taco Tuesday for those who celebrate. We're going to get this stream started here. Appreciate you all tuning in. So let's fire things up. Let me just make sure I'm out there on all the channels I should be. Yeah, it looks pretty good. All right, so this is going to be Back to the Futures with me, Markets and Mayhem, featuring Bookmap and talking about how I use Bookmap for order flow analysis. Let's quickly get through the disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. A little bit about me. My trading journey began in 2005. I funded my own account and began trading stocks, then moved on to options, futures, commodities, and Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro. I managed to get out of the way of the great financial crisis for the most part, but it was mostly luck and a focus on technical analysis that had me cautious. My approach is systematic, driven by momentum, price action, options flows, sentiment, positioning, volume profile, and the big picture. I backtest and build my own models and systems to trade a variety of asset classes. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data, and I co-founded TraderAid in 2022 and MacroVisor in 2023 to share my experience, ideas on market opportunities, and education. I also build a number of unique tools and models and provide one-on-one coaching. Also, for folks out there, we have some exclusive deals before we get things fired off here. You can get up to 40% off of Bookmap plans by visiting traderaid.com/bookmap. That's traderaid.com/bookmap. You can get 20% off TraderAid plans using the code Mayhem20 at checkout at traderaid.com. That's for our Discord plans where we share our educational seminars, ideas, and unique market indicators. And if you're looking to learn more about Bookmap and need more one-on-one help, I am for a limited time offering 20% off your first coaching session using the code COACHMAP at checkout. And the Bookmap team would love to have you on their Discord. That's where you can have the most ideal viewing experience. That's discord.com/invite/bookmap, or you can use the QR code on your screen. So, with all that out of the way, let's dive in, shall we? We've got Bookmap on screen here, and we're going to be talking a little bit about what's going on in some of these markets and how I visualize that through the lens of Bookmap. So, first, let's take a look at just the S&P 500 from the European Open here. So we're going to zoom that quite a bit out. We could see there's been a bit of a bid from the European Open, but largely we've been chopping sideways back to the overnight highs, making new highs really. And we have a decent range overnight, about a 16-point range. So there's been some decent trading opportunities, mostly to the long side here, sort of buying dips and having it push back towards those highs. But behind the scenes, we have seen some distributive pressure overall. And the Nasdaq, pretty similar look, got that nice bid overnight, made some new highs and pushing back towards those highs pre-market here. We do have just about 26 minutes before the open. And the Russell, pretty similar look there as well. You had that bid off the European Open, and we've been pressing towards the highs, kind of bouncing off them, making a couple new highs along the way. And gold, looks like I'm going to have to rotate that contract, so I'll take care of that not too long here. We have rates moving lower here, 10-year trading in a range overnight. And let's take a look at our friend Bitcoin. Bitcoin not having such an ideal session, actually seeing some bit of buying off the European Open, but now really seeing it sell down here, popping just a bit, but overall the direction is lower. And then let's take a look at crude. Crude's seeing some pretty significant selling pressure here, down to 74.80. The selling in crude is not terribly surprising. We've been talking about some of the levels I've been watching on this particular commodity, and as it's breaking down below those key supports, retesting those May-June lows was my base case, and it seems like that's going to happen pretty soon. Now, supply and demand for crude remain pretty constructive for the commodity. You still see a fair amount of demand beating expectations per EIA and API data. But nevertheless, we have price doing what price does, and we have to take that into consideration, because we can have every thesis we want, but if it's not the correct thesis, then it's not a good trade. And that's why for crude and other commodities in general, I need to be able to qualify whatever my macro thesis or other thesis may be with the momentum. If I can't do that, I'm simply not going to take the trade. So let's move back to the S&P here, and we'll use the time slice to just take a 30-minute slice pre-open here. You can see there are still those bands of liquidity around price on the S&P 500, and that's something that you typically weren't seeing unless we were at contract roll time for the futures, which happens 4 times a year. Typically, you'd see that about a week to 8 trading days ahead, and maybe even a day or two after. But now it's just sort of been a consistent theme, and it seems to be something that has maybe some relationship with the options market, but overall, these bands of liquidity have been a more consistent theme for the S&P. We would typically see them in things like the Nasdaq and the Russell. What does that mean for the S&P 500? That's a great question, but I think one observation we can say rings true going into all this is that the S&P 500 is not trading with a lot of liquidity. It is a thin order book. And that thin order book does change how I look at the market, because when I see a thin order book, it tells me this is a market to be approached with some degree of tactical caution. It's a market where I would rather take smaller size, because I'm not sure if I take a normal size position, if I'm going to get stopped out managing my risk properly. So I instead take smaller size and employ wider stops. And that's sort of the market environment we're in, particularly given that it's a week with the Federal Reserve, a whole lot of different earnings reports, including Microsoft, Apple, Amazon, and Meta. So these are all things that I have in the back of my mind as I consider what kind of size am I going to employ, because quite frankly, the order book depth is low. We are in negative gamma territory as well. And about 50% of the buybacks are on pause. So some of those supportive flows, as well as the options decay flows and SPX, they're all sort of on pause. That leaves us a market that's not necessarily quite as liquid. So it does mean that some degree of caution is warranted, especially when sizing positions. Ahead of the market, S&P 500's bid up about 0.25%, Nasdaq's bid up about 0.33%, Dow is down 0.07%, and small caps are bid up about 0.25% as well. Now, we do have potential selling from CTAs. That contingent looks like, outside of any reasonable bid, they're likely to be selling somewhere between about $30 and $80 billion of S&P exposure over the next several weeks. That's not an enormous amount, by the way, given the sort of flows this market sees on a daily basis. Across equity market futures, the indices trade in the US about 400 billion of notional a day. SPX, the options complex alone, trades about $1.2 trillion every day of notional. So CTAs could help to add a little bit of pressure, but in a nutshell, in isolation, that's not going to be something that moves the market. It just may add to moves. We did have some macro data this morning as well. We got JOLTS data, or we're going to get JOLTS data. My apologies. That's coming in at 10 a.m. So that'll be something that we watch pretty closely. The expectation there is 8.02 million with a previous reading of 8.14 million. We also get Conference Board Consumer Confidence. Earlier today, the data I was thinking about was the home price index, which actually came in flat month over month, up 6.8% year over year. JOLTS, I think, will be important, but it's one of those events that you can't necessarily trade ahead of because it's sort of a coin toss as to where it goes. But the reaction to it could help to set the tone for the day. There's a forecast of, again, 8.02 million. I would say a deviation on either side of 3% up or below this forecast could give us a bit of a reaction in the market. If we have a, let's say, JOLTS number comes in at 8.24 million on the upside, right? Beating the forecast at 8.2 million or 8.02 million. I think that would lead us to a rates up, risk off type of scenario because it would probably add to some consternation by the Fed that the labor market isn't really weakening, that they don't have dual mandate cover for a cut. On the other side, if it comes in well below 8 million, let's say it comes in at 7.76 million or so, I think on the other side, that would give rates reason to come down, particularly on the long end, and we could get a bid in equities. And this is just sort of the short term, maybe 1 to 2 hour reaction we'd see to JOLTS. It could add to an overall trend day if the data sort of comports with the trend, or it could undermine one if it strongly disagrees with it. If it comes in line, then I don't think it's worth paying too much attention to insofar as market pricing. And coming into today, we have an order book depth of 45,000 contracts on ES and about 6.4 thousand on NQ. So this is a pretty light order book. Again, that is lower liquidity levels. I like to see 60K and above on ES to go full position size, and we're a ways away from that. Now, it may thicken up a bit as we get to the opening bell and through the opening bell, and certainly we'll be watching. And tonight we have some big earnings coming out. I think that it's a difficult week to get too much conviction until we get through the earnings and the Fed. That's the other reason that I don't necessarily, especially on a swing time frame, want to be doing anything too aggressive here. So tonight after the close, we have AMD, Microsoft, Starbucks, Arista Networks, Pinterest, First Solar, and Electronic Arts. That's a fair amount of heavyweight reporting happening after the bell, particularly with AMD and Microsoft. I think those will be worth watching pretty closely. Microsoft has been pretty reliable in their ability to impress the market, so we'll see. Expectations are high. The differential between the valuation of Microsoft and the Nasdaq 100 is pretty big, but Microsoft has also been able to warrant that differential with their growth. So the big question is whether that trend continues as led by their cloud offerings. With AMD, I think all eyes will be on the data center sales. that really is the biggest growth opportunity for them to try to take a chunk of what NVIDIA is really locking into with that GPU acceleration market. And AMD has some great offerings. The issue is they don't have the software to power it, whereas NVIDIA has CUDA. AMD is reliant on OpenCL, which is a bit of an inferior alternative. And that's one reason NVIDIA has become so popular. It's not just their hardware. Arguably, it's really more of the oligopoly lock-in effect, or monopoly lock-in effect in this case, of CUDA. That is to say, if you're developing an app that's going to run on NVIDIA hardware, you pretty much have to do it on CUDA, which means that once you have, you're locked in. All right, so we've got some questions out there. I'm going to get through them one by one. What does negative gamma territory mean? That's a great question. So right now we are in negative gamma in the sense of dealer positioning, which tends to change market pricing dynamics. So what that means is essentially we're below a lot of that implied positioning, and that puts us in an environment where it's more likely that we're going to see dips sold and rips bought. So it's a bit of a volatility catalyst. And I create charts on my Discord server of the gamma profile for the S&P 500. So just give me a second. I'll pull one of these up so you can have this as a reference point. All right, so here we go. There's a gamma chart for the S&P 500 as of this morning. And the gamma flip level on SPX cash, not futures, but cash, is 55.30. And spot yesterday was 54.64. Now pre-market it's 54.78. We're still well away from that gamma flip level. So the further away you are, the more likely it is volatility increases to the downside, and you have a higher likelihood of more corrective price behavior overall in negative gamma environments when you back test that versus positive. And positive tends to be the opposite. You have rips bought, dips sold, compresses volatility. This all has to do with how dealers are hedging their delta exposure to SPX options flows. So it's just worth watching because we're in that negative gamma environment. And I think that with everything else that we see, low liquidity, lots of big events on the horizon, buybacks partially on pause, and CTAs and other elements probably leaning more towards the sell side, we have some volatility catalysts that are sort of built into the intermarket dynamics here. How do we know the number of contracts? So you can look above and below here, right? So above is the number on offer, below is the number on bid, and that shows you the order book depth. And then to the right, it'll show you the delta, right? So there's 2,000 more on bid than offer. So that gives you just a really quick glance as to order book depth. CME has some great tools for that called Quick Strike, but they don't give you the real-time view. They allow you to chart it over time to kind of see where you are versus norms. So that can be another way to look at it. But again, I like to look at 60K as my baseline for a liquid market in ES, and we're at 46,000 right now. And folks, if you have any questions out there, do let me know. I'll be getting to them, as I go through everything and look. Does VANA add extra context to a negative gamma environment? Well, I think the biggest context for VANA is really skew. And right now, skew is pretty low. So skew is the differential between put and call premium on S&P 500 index options. So let me get a chart of this up so I can kind of have something to show you as I explain it, because otherwise it loses some of its context. So this is skew on the S&P 500 index options on screen. You can pull this up on stock charts with $ skew. And you can see we're towards the lower end of the range for the year. So when you think about VANA and you think about Charm, you think about them in the context of how much excess put premium is there versus call premium, so you can get a sense as to how pronounced those flows will be. right? Because they're the decay of all options that create these flows. So you're really looking for more put than call premium decaying to see a more pronounced VANA or churn flow. So that's one big part of that, okay? So we would say that this is not a very well hedged market. We've seen skew coming down into a week of event volatility catalysts. So that tells you that if we had VANA and charm flows right now, which they're on vacation, I believe, until sometime next week, but if we did, they'd be rather subdued. Now, in a normal negative gamma environment where those flows are still going, let's say next week and on into August OPEX, I think negative gamma matters because it can add to the volatility that these flows might create, especially in the first and last hour of trading. For example, let's say you're in a very well hedged environment with put skew that's well in excess of call skews, sort of the opposite we're in right now. And you're in that environment where it's, pre-OPEX, you have these flows building up, and you have a very powerful passive decay or VANA flow come in the first hour. That negative gamma would add to the potential of that flow pushing the market higher, right? Because it's going to be rips that are bought in negative gamma. So you get a VANA rip, then you have negative gamma add to the potential of that becoming more pronounced. So hopefully that helps. I know that there's a lot to kind of digest in that answer, but I would feel bad if I didn't give you kind of the whole picture for your benefit and also just for everyone else's benefit that's watching or listening. So hopefully that helps. Yeah, you can see 46,000 for ES on Bookmap. If you're looking on screen, you can see it right here. You can see the top right 22K in red and sort of the bottom right 24K in green, right? So you add those two up right now, that's 46K. That's the order book depth on ES in Bookmap. And you can use a plugin to see this for yourself. And that is going to be outside liquidity. And you have to configure it as I have here. Show liquidity and the difference, include visible price levels. That part's important because otherwise you're not getting the whole picture. So let me know if that's helpful for you. And folks, this stream is available in real time on the Bookmap Discord. You can join that by going to discord.com/invite/bookmap. And you can view a whole bunch of different educational content over there. It's a great community. So if you're interested in Bookmap and trying to up your game, especially in shorter time horizons of trading, this is a great place to start. Also, if you're interested in picking up a copy for yourself, you can get up to 40% off visiting traderay.com/bookmap and scrolling down to those specials. We're just about 6 minutes away from the opening bell here. Let's just take a quick look at a longer term chart. Give me a second here. So I'm going to put this on screen, but first I just want to kind of set it up for you all. Wow, so we're really right there. So my weekly pivot is 55.1850 for ES. I am more inclined to take longs above that level and more inclined to take shorts below that level. Of course, I do like to see the 20-minute opening range to give me a sense as to whether a trend day is building. And you can see we're just right there, right below that pivot. So this makes for a pretty interesting potential trading day here. This pivot is based on prior price action. You can see this was a level of resistance going back. I'm looking for it to either continue to be resistance and reject here, in which case I'd be taking shorts below, or potentially become support. If we're able to break above that, and especially the point of control, then I can see us getting drawn back higher. So this is why I'm coming into the market with really no strong bias as to how the cash session may trade on an intraday basis, because quite frankly, anything can happen, particularly on a week like this. And so I've created a sort of line in the sand at 55.1850, and that's going to keep me a little more honest You know, if I have a 20-minute opening range breakout to the upside and we're above this pivot, I'm very constructive on looking for longs. Just like if we see a break below that 20-minute opening range and we're below this pivot, I'm looking for shorts and I have levels to carve out to where these could potentially go. So let's say we do get that long breakout. If we're just seeing this low volume node as a potential area of resistance, I'd be looking for this to potentially move quite a bit higher. We could even see a move to 55.78 on a powerful break. Now, that may not happen today. That may be more of a post-earnings, post-Fed type of reaction situation. Just like we have this low volume node down here that's likely to act as resistance at that key psychological level around 5,400. Right? So these are a couple of areas to watch out for. I would say 54, 32, 25, 5400, and 5369. Those are key areas of potential downside support to watch. Just like 5578 and 5611 are key areas of overhead resistance to watch if we're able to break above that weekly pivot level and build some momentum. So that's what I'm looking at as we get ready for the trading session today. We're sort of at this level. We've been rejected here several times, right? We've had 3 days in a row where we've tried to climb up and been rejected at that pivot. Will today be the day? That's going to be the key question we ask. And it may not be resolved today. We could have another head fake look above and fall right below again. That's why I say patience is key with this type of stuff. It doesn't necessarily mean it's a magical solution for where the market's going to go, but it certainly helps to put probabilities on my side if I see those two events line up, the opening range break out or down and being up or below the pivot respectively. It sets up for a potential long or short on an intraday basis. So we'll get back into Bookmap here. We do see there's a passive seller. You can see all those iceberg icons overhead. And those are open orders, by the way. There were 600 sold across in 4 orders here. You saw buyers become just a little more timid from there. And you see 3 more open orders where there are more icebergs above us, essentially resting supply. And we'll be watching that to see how much supply is up there should price be able to push back above and try to challenge that supply area. Let's take a look at the Nasdaq ahead of the open here. It's looking more constructive than the S&P overall. We'll just zoom that in a little bit, but we can see that upside pressure, some significant buying. The delta bubbles here really showing you the difference between buyers and sellers. Green bubbles showing you an excess of buyers versus sellers, the size showing you the amount of that delta. So it can be pretty helpful to watch. And I'm just going to take a quick look at one thing here. I'm just going to put the best bid and ask back on screen. And we see S&P starting to climb back towards that area of offered liquidity. 2 of those 3 orders have been closed out now as we approach the open. And markets are reasonably well bid ahead of this open as well. We do see interest growing at the 5,500 strike for SPX. That could become a bit of a magnetic upside level should we see positive momentum continue into the cash session. And markets are opening here with a pretty decent initial bid, just a lot of vol right there. And remember, we're going to be keeping an eye on that 55.1850 level on ES, as well as that 20-minute opening range and how JOLTS comes in. And that bid turning into a bit of a sell on the S&P here. See how the Nasdaq is doing comparatively. Nasdaq pushing to some new lows here versus the S&P. Russell doing the opposite overall, but let's zoom in. Take this to a 30-minute time slice. And I'm going to need to update the gold contract, so I'll do that later. We are seeing a pretty decent bid in the 10-year. And crude coming back from its lows, but still just looking quite nasty overall. This morning, it's down just over 1%. Also, continued weakness in agriculture, soy, corn, wheat. We talked a little bit about that on the Trader Aid Discord during navigating the markets, that there's just nothing to love about agriculture right now. In fact, a lot of commodities looking pretty troubled right now. And you kind of could see it coming when everyone started getting real bulled up on commodities and positioning started to get real lopsided. That was a bit of a warning sign, particularly in things like copper and gold. We do see ES pushing now above our pivot, so let's see if we're able to really build up above here, and also what our opening range ends up looking like. Right now, just in that first 2 minutes of trading, it's already decently wider than we typically see this early, at about 7 handles. You did see a decent passive seller up there, about 800 contracts of ES sold. That may give buyers just a little bit of pause. Let's go back to the Nasdaq, which had made a new low. Now it's pushing to a new session high, cash session high here. You can see that the red line above tracking the highest price level, just like the green line below tracking that lowest price level. Nasdaq opening range so far about 45 points. And then there's the Russell, which just has a mind of its own and it's doing Russell things here as it pushes higher. Continuing to make new cash session highs on the Russell. And give me a sec, I'll re-add the gold contract. Going to December now. S&P also just tagging a small new high here in the cash session, building above that pivot. And for those that weren't tuned in, that weekly pivot that I'm looking for in ES is 55.1850. So Atlas asks, can offers just be a fake out where they get pulled as the market moves closer? So we have a couple different types of offers. We do have the icebergs, and we also have the limit orders, right? And yeah, both of them can be shifted all over the map, right? So you could have price move closer, and you could have that offer disappear, or it could get filled, and they could say, we're done. We don't necessarily know with the icebergs how big the implied limit order is there. That's sort of the point of the icebergs. So that's another element to take into consideration. With the resting offers, we at least have some idea of what the size may be. But yes, they are, most of the trading in ES is algo driven. A lot of that trading is actually driven by hedging SPX options flows into ES, right? Since dealers are selling puts and calls, they're hedging that delta using ES a lot of the time as well. And so that's where a lot of that trading is being, I would say, encouraged from, is the options complex, which trades about 1.2 trillion in notional on SPX every day, with a lot of those options expiring in a week or less. So to answer your question, most of that's HFT, and it can certainly move, yes. But what's helpful about it is, often is the case when you see a large offer overhead or an iceberg that's implied to, have a decent amount of size, like they've already transacted hundreds of contracts there and it's still open, you can at least look at that as the potential for more supply around that level. And what's most important is, how does price react? And how does that offered liquidity react? If it gets pulled away, that's bullish, because obviously now you have more clear skies overhead. And we do see a little bit of that on ES here. You see a lot of those offers getting pulled out on the iceberg side. And then in terms of resting liquidity, we'll zoom out here. There's not really a lot on either side until we get to about 55.45 on ES, which is above yesterday's most active SPX call strike translated to ES levels. That was around 55.39. So we'll zoom back in here. We continue to see this market pressing towards new highs in the cash session. About a 9-handle opening range so far. We'll let this develop for a bit. We've got until 9:50 till that 20-minute opening range has completed, showing us really what the potential may be if we were to get a trend day break out or below. We also have JOLTS coming up at 10 a.m., expectation of about 8.02 million. And Conference Board Consumer Confidence with forecast of 99.7. We are above my weekly pivot, 55.1850. So overall, looking constructive going into this first hour of trading. And Russell is just continuing to just grind higher here, looking stronger than the rest of the indices after yesterday's pullback. We are at a relatively key level with the Russell here, so I do think it bears watching. Let me see if I can pull up a chart. Yeah, so here's a chart of the Russell. This is from our MacroVisor weekly dashboard. We've been tracking this key level for some time. And you can see why, because it does track back to some of the other areas of resistance during the rally that we last saw in 2021. So we see that sort of pushing against that key level. I would just be cautious of the Russell unless it's able to make a decisive break above there, because a lot of this is being driven by degrossing and call buying. It's not necessarily rotational. At least it doesn't appear to be yet when looking at the actual flows. Nevertheless, we do see a strong bid in those small caps today, setting up some potential trading opportunities. Also, some of the more hated and shorted parts of the single stock world are getting a decent bid today as well. That further illustrates the idea that this could be more hedge fund degrossing. Russell continuing to make new highs here. Nasdaq sort of chopping in a range, but it did make a new high as recently as just about 2 minutes ago. And S&P continuing to push towards new highs here as well. Let's take a look at what's all going on with options positioning going into today too. You can see the gamma flip level quite a bit above here. So the market has quite a lot of work to do if it's going to climb back into positive gamma territory. And we can see there's another reasonably sized resting offer here now, just where yesterday's hot call level was. And that is now the largest area of gross gamma positioning next to the vol trigger. So this would be the second largest on the whole chain. Just around yesterday's hot call. That's no accident because we did see some positioning built up around there, largely in the form of buying calls. I know it's been said that retail loves to sell SPX options, but I would take the other side of that and say often they don't. That takes a lot of buying power to sell SPX options, and most accounts are not configured with that level of options privilege. So while retail does make a larger and larger percentage of total options trading, they're more on the buy side and the spreads than just selling options. I think the idea that retail is a large seller of SPX premium is a bit of a misnomer that's not backed by the actual data. S&P 500 up about 0.5% here. And we've got about a 12.5 point opening range so far as we approach that 20-minute mark. Shifting across the pond, interest rates futures in the UK show a 60% chance of a BOE rate cut in August. That's that August 1st meeting coming up this week on Thursday. Now we should have some of the options data from the flows starting to come in pretty soon. So we'll be keeping an eye on that as well. Most of the interest in the order book here is above when you look at those unusual sized bids and offers. So that's another thing that's interesting because that is generally constructive to see those really large offers above price.
Balance 50%.
Sure. So for the discount, let's see. And folks, I did get a request for that discount link for Bookmap. If you are interested in checking it out, you can visit TraderAid.com/bookmap. That's TraderAid.com/bookmap. Scroll down to the bottom, check out the specials. You can get up to 40% off. And this is all about having fun, learning. If y'all have any questions about anything that you see on screen, please feel free to ask. I do want everyone to gain the benefit of kind of learning more about looking at order flow through Bookmap. So we can see now we have some more aggressive sellers. So you can see that by the size of those delta bubbles. We're getting down to the volume weighted average price line here and closer to the session lows. Still a relatively thin order book. Unfortunately, the market being open really hasn't changed that. It's about 46,000 order book depth, now 45. So it's actually about the same as it was pre-market, which is not what I want to see. I do want to see greater order book liquidity for more orderly trading to be able to size up and be able to use tighter stops. But unfortunately, we don't have that. So that means if I'm going to be taking any trades, I'm going to be using smaller size and wider stops. I'm also going to be more discerning about execution. Let's take a look at some of the mega caps as well. It's always interesting to see what they're doing after the opening bell. So you've got Apple had a bit of a sell, but now we're starting to see it get a nice bid off the lows, making new session highs here. We do have a large amount of resting liquidity just overhead price, and it seems to be bouncing below it. But you can see as we zoom out, that liquidity is building above. That does look pretty constructive for the stock. Again, those resting offers can act a bit like magnets if there's enough demand. So let's take a look at how these stocks trade really over the next 20 minutes or so, or 15 minutes, as I've got to wrap up around 10. But overall, this large amount of resting liquidity overhead on Apple looks constructive. You can see it was pulled into those prior levels and demand was sufficient to take out those offers. Amazon, the opposite look as Apple. It had a pop off the open and then a sharp drop. And you could see that was pretty significant there, dropping from about 185.90 all the way down to 183, or even just a tick lower. And then we see just a bit of a reflexive pop, perhaps an overreaction down there, but still path of least resistance lower for that stock. Its earnings coming up, I believe, on Thursday. Got Alphabet or Google or whatever they prefer to be called these days. I like to joke because I'll always call them Google. It had to pop off the open, but like Amazon, it's actually selling lower now. So that's not looking so good for the techs. Nasdaq is up, but it's only up about 0.15%, weaker than the S&P, which is up 1/3%. So we're starting to see some real weakness in the mega caps. Meta is showing a similar look. It was constructive, but it is starting to fade pretty significantly here. Now down to VWAP. Microsoft pop and drop. Pretty similar to some of the other things we're seeing now, making new lows on Microsoft. NVIDIA didn't really get much of a pop, but we're sure getting the drop on that one. Making new lows on NVIDIA, 108.80 clocked recently, now trading 109.38. And Tesla, which lives in its own universe, also making new lows here on the session. And I'm just going to pull gold into here because I did get all the data backfilled. I'm just going to clean up the chart. And let's take a look at Bitcoin here. Bitcoin also quite choppy. Had a decent little pop off the open. and then we're just selling it right back down. So we'll revisit gold for a second here. I just need to sort of organize things a bit. So here's gold on screen. Now, as we know, this one had just a sort of flat session from the European Open, got a little bit of a pop in the US pre-market, sold it down, got another pop as we approach the cash open and into it. Now we're seeing that settle a bit. Gold is still stuck in a trading range. So right now with gold, I'm not a huge fan of trading it until it kind of breaks out one way or the other. And I'm watching that pretty closely. We do have that contract roll, so the sort of constant price gold looks like it's challenging the top of the range, but if you adjust for that contract's delta, you'll find you're still very much stuck in that trading range. So I'm still cautious on gold here, and even more so on silver, which looks rather precarious. All right, so we've got some questions here. We're going to get through these. Give me one moment. First, a comment. Nico says, NVIDIA drags down the market, in my opinion. Yeah, it's quite possible. It's such a large weighting, and there's so much sympathy trading that happens with other semiconductors that, when NVIDIA goes down, it tends to have an impact on like maybe about $4 trillion worth of the market or so. So I would agree. It can potentially pull the market down, but it all depends on what the rest of the market does as well. For now, the heat map is showing us just a sort of a sea of darker green overall. It's overall still constructive, but some of that is starting to fade, especially in the larger text. So that's something that we'll be watching here, particularly as we've now formed that opening range. We have a better sense as to sort of how much we may get of an extension if we break below or if we start to push higher. Right now, this opening range is just shy of 14 handles in the S&P, so nothing to write home about, but also not too shabby. And we are closer to the lower end of that opening range, so we will be looking closely at JOLTS data to see whether or not we get a continuation through the bottom of that opening range, or if we get reflected higher. And I'm looking for JOLTS kind of plus minus 3% versus the forecast to trigger that. Otherwise, if it comes in inline, not really looking at it with too much consternation. We also have consumer confidence coming in. It's similarly to JOLTS, I'd be looking for a larger deviation, particularly in inflation expectations, to give us some kind of signal for the broader market. And as a reminder, my weekly pivot for ES is 55.1850. We are below that right now. And so I've been asked, where in Bookmap do you read that total liquidity number from? So you don't. You read it by adding the total offers and the total bids, right? So above you have 23,000 on the top right. Below you have 23,000 on the bottom right. You add those together, you get 46,000. And if you want to see that on your screen, you've got to configure outside liquidity and ensure you're including visible price levels and showing the liquidity and the difference, right? That way you can configure your Bookmap to show the same information that mine is about order book depth and make more informed decisions about the liquidity of the trading environment, how that may impact realized vol. For me, if it's less than 60, I've got to take smaller size. I need to use wider stops, and I will be more discerning about execution. All right, so let's take a quick look at Google. Not looking so hot. Google had a pretty decent drop from the open. And this was one of the questions in the YouTube chat. So basically, Google's flat. It was bid up pre-market, sold down from the top, and now we're getting down to basically price action being flat. We're below that point of control. We're below VWAP. So sellers from an intraday momentum perspective are favored here. Eric, could you give me a little bit more about what you're asking regarding gamma exposure? So let's go back to the S&P here, because we do have some options data to take into consideration. If we look above here, we can see there is a pretty wide variance of opinions from the SPX options market translated into ES levels, and the flows are relatively even. The most active put and the most active call about neck and neck. The second most active call, the second most active put about neck and neck as well. That's the hot call and put, and the warm call and put being the first and second most active. The midpoint's been drawn on screen because they're within 20% volume of each other, so that tends to tell you it's an options auction that's in relative balance, which doesn't give us any real directional edge looking at the options implied data, at least of yet. This data is refreshed every minute throughout the day. I'm looking at about 10,000 options contracts on CBOE and refreshing that data every minute for the positioning as well as for where the most active flows are. That's a tool that I built myself to help me and my Discord community on TraderAid get a bit more of an edge on how options are influencing the market. But I also have a number of other options tools I built specifically for pretty much any optionable security, whether it's the indices, the ETFs, or the stocks. So Eric, if there's something specific with gamma exposure you want me to look at or talk about, I'd be happy to do that. Got about 3 minutes left. I'm going to go maybe a minute or two long just so we can parse the data for JOLTS and consumer confidence, and then we'll wrap up. But remember, I'm here every week, Tuesday at 9 a.m. Eastern, for an hour, talking Bookmap, looking at markets. So I hope you'll consider sending a reminder to join me in the future. And if you enjoyed this session, there is plenty more coming. And remember, you can get up to 40% off Bookmap. Visit TraderAid.com/bookmap. Scroll down to the specials. Or if you'd like to check out TraderAid, where we've got a whole bunch of really cool tools for viewing options impacts on the market, got a great community, lots of awesome educational resources and seminars and activities, as well as a fair amount of great market idea generation, actionable information. You can visit TraderAid.com and use the code Mayhem20 at checkout for 20% off your first month or quarter. And if you want more one-on-one, hands-on, I do coaching, and you can use the code COACHMAP at checkout for TraderAid if you'd like to request an hour of one-on-one coaching time with me for your first session. Nasdaq's about break even, up about 0.01% on the day. We saw that earlier with the mega caps really giving back those pre-market gains. S&P's bid up just about 0.25%, Dow's up 0.5%, small caps up 0.75%, and VIX is about flat. So someone asked, does TraderAid cover some of your swing trade ideas as well? That was a question from Slowdown on the Bookmap Discord. It absolutely does. I shared a fair amount of swing trade ideas, pair trade ideas, actually, and navigating the markets over the weekend. I also share them in the Trade Ideas channel on the Discord at a cadence that matches where there's opportunity, right? So when I see opportunity, I call it out. And I try to make sure that the risk to reward is favorable for those trades. So I never want to take on more risk than the potential reward I see on a trade. We do see liquidity drying up ahead of the release of that data. You can see the order book really lightening up on S&P 500, except for some of those large standing orders that have been sitting there waiting patiently. And we're waiting for that data to drop. Again, that's JOLTS and consumer confidence. JOLTS expectation about 8 million, consumer confidence about 99.7 million. And we do have consumer confidence in actual number is 100.3 versus a forecast of 99.7. So that is a beat on consumer confidence. And JOLTS came in as well at 8.184 million. That's 8.184 million. So not quite enough to say that these numbers are a upside surprise that would concern me for risk. Let's take a look at yields here. Did see a bit of a drop in the price of 10 years. Saw some passive selling, 1590 on the iceberg. That implies yields on the long end starting to move a little bit higher. But again, not a big market reaction function as we start to see liquidity come back to the order book here. So we are below my pivot. We have not broken above or below the opening range. I would still remain somewhat neutral until we see how that plays out. If it plays out, we could have a day where we continue to just balance here because there hasn't been yet any event-driven catalyst. But if we push below the opening range here and build some acceptance, I would be looking for a downward trending day. Same for the top of the opening range here. So we can see those numbers marked out on screen. Feel free to take a screenshot. Looks like we're starting to make a push to the bottom of the opening range here. So my key, if that's going to be a trend day, would be seeing it build some volume down there. Some of what's called acceptance down there and maybe push about 3 or 4 points lower. And then that could open up some potential continuation trade opportunities in ES. And here's our chart from earlier, looking at ES and where some of those potential support levels may be below us. So folks, I hope this was helpful to everyone out there. I really appreciate you tuning in. This has been Back to the Futures with me, Markets and Mayhem of TraderAid. I'll be back next week at 9 a.m. And I'm going to say it looks like we're starting to break the bottom of the opening range. So we could be seeing a downwardly trending day. Let's give it a little time to bake in, but that's my initial read. Thanks again for tuning in. I'll catch you all soon.